Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about AARTI drugs and whether these are the very good levels to buy the stock, what lies ahead in the next 5 to 10 years, and whether you should invest in the stock or not. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about AARTI drugs, I have a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will help you also ask me questions in greater detail. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up every now and then on stocks and markets. If you have a detailed market or company talk you want to have one-on-one with me with respect to a number of stocks you are holding, you can directly email me. Now about AARTI Drugs, established in 1984, it is part of the AARTI group, and they provide API products, pharma intermediaries, specialty chemicals, and also produces formulations. So gamut of products that AARTI Drugs produces. Actually it was not listed before, so we have not talked about it. Otherwise the company in the unlisted space was one of the best. It got listed just a few months back and surged in trade after listing at around 500-600 or somewhere around that, and has gone up manifold 6-7x, and after that we have had bonuses and splits, so the price has been the way it is. So now we are talking about it. So the products are APIs as well as formulations, and the products in APIs also include ciprofloxacin, hydrochloride, metronidazole, metformin, HCl, ketoconazole, and ofloxacin, etc. So many of the products that I'm mentioning here are used very commonly by people in different forms and across the board. So that's why it becomes more or less, it is a pharmaceutical company, but it becomes like a consumer company, because the most of the drugs that they are producing are being consumed on a virtually daily basis by someone or the other across India and abroad as well. So this is kind of a, you can say, cash generating business that could generate cash even after the pandemic and when things even normalize. And that's why the surge in the stock, that's why buying that is happening big time in the stock. Specialty chemicals that they have includes benzene, sulfonyl chloride, and methyl nicotinate, and these you can say specialty chemicals are also pretty common in many of the products that are being made. In fact, many of the drugs that are being made by other companies as well, especially in different kinds of products that are being used across the board again. So that is why AARTI drugs has had a number of products on their table, and they have a, you can say, a number of you can say revenue streamline going on with these products for a number of years as well. So they export around the globe including USA, and the business is really doing extremely well. In fact, in the last 4 or 5 months they have produced very good numbers in the last 2 quarters. If you look at the financials of the company, then if you look at this, so the sales went up by around 35%, and these are the financials of Q2 FY20 versus FY19. So these are actually numbers that are pretty earlier on. Actually these are Q1 FY21 versus Q1 FY20. PAT was around 85 crores versus 22 crores. This was a jump of 400% in the profits. It is a completely debt-free company. High promoter holding is there. A return on equity of 23% is very strong. Operating profit margin is of 18%, which is pretty decent compared to other pharma companies. It has done reasonably well. If you look at the performance of the stock, then the stock has been surging relentlessly since its inception or the IPO when it has come in. It became 6x in virtually no time. So it went up to something like 3,500 from around 500 odd, 500, 450, 500 rupees to 3,000. in virtually no time and went as high as 35, 3600, then got split bonus, etc. So now it is trading again at highs, so around 800 odd rupees. It is at virtual highs at the moment. Currently it is trading at 35 times. In fact, it is trading at 40 times earnings by the time I'm making this video. So the presentation was made earlier. It is trading at around 40 times earnings. Market cap has swelled up to 7,000 crore from around 1500 odd crores or something like that. But still at 7,000 crore, it is not a mega cap company or a very large cap company. It still would be considered as a small cap company, and has rewarded investors or people who have invested in the IPO. It has rewarded them big time, even when they have, you can say, book profit out of it. Still people who have got in at 600, 700 rupees are making good money, 700, 750. So the company looks extremely good both on the stock front as well as on the business front, but whether the valuations are justified and whether these sort of valuations will continue to happen, that needs to be understood. What are the salient features of the business and the company? High sales and profit growth record over the years has performed reasonably well, decently between 20 to 30% on sales and profit front, and it has done very well in the last quarter. Strong consumer medicine product under its belt. So as I mentioned, these products or these medicines that they are producing, drugs they are producing and selling, are more or less consumer oriented, and they are very much consumed by people all across the world globally. Hence these are not you can say specialty drugs or drugs that are used in special circumstances. These are very commonly used drugs or medicines that we are talking about. So consumer interaction is pretty close. It is backed by the AARTI group, and which is also very special in itself. That the AARTI group with its AARTI, you can say, industries, etc., is also doing well. So the promoter pedigree is also there. Valuations were in favor 6 months back. So 6 months back, when it got listed, or say 3 4 months back when it got listed, valuations were very attractive at 500 600 rupees at this point of time. Or if you take into split, then around 200 150 rupees, it looked very attractive. But at this point I would say that valuations are slightly stretched. Prospects of consistent business going forward is there, and that is the biggest feature. So I believe that the kind of business or kind of products that they are selling, it's going to sell even more going forward, and the prospects of consistent growth is there going forward for the next 5 to 7 years. Sector is again back in favor after 5 years, and that is also a tailwind for the company, that over the next 3 4 5 years it's going to continue to benefit the company altogether with respect to investments coming in from larger investors, FIIs, DIIs, etc. So after looking at the salient features, let's understand whether the valuations are attractive or at what levels one should look to get into the stock, in my opinion. So our valuation stretched at 40 times current earnings. It looks overbought for me. I mean, you look at all pharma stocks, normally they trade between 15 to 22, 25 times. Even if we take the premium valuations for the stocks such as AARTI Drugs and for the kind of business that they are doing and the return ratios, it should trade at around 30 times earnings. So there is a greater possibility that the stock will correct. There's a greater possibility that either earnings should expand even more, which looks difficult with the kind of earnings that they have come up with for the June quarter. So in my opinion, there could be a PE, you can say, contraction, and we could have a situation where the stock price either will not go up or will come down even further. So I think around 25 to 30 times is a reasonable level to get into the stock. A possibility of decent correction is there in the next few months. Rather than jumping in at these levels, I would like to get in probably on a slight decline, and that would be the opportunity to probably accumulate. remember that nothing goes up forever. So you can look at a Bajaj Finance. It was the in thing 2 3 years back. It went up from 2011-12 all the way to, or in fact 2014-15 to 2018-19, and even a year and a half back it was all about Bajaj Finance going even further up and so on and so forth. Now most of the people are out of it, and probably from 5,000 it went to, I think, like 2,000, 2,200, something like that. So corrections do happen even in the best of stocks, whether it is a Nestle or Asian Paints or any kind of stock that you talk about, and those will be the opportunities to get into such stocks. So I would wait for the correction. So what could be the possible strategy? So wait for around 20 to 30% fall from the top. That doesn't mean that you wait for a fall from 800. Suppose the stock goes to 1000, then you wait for 700, 750 levels to get in. If it goes to 1200, you wait for something like 900 to get in. Wait for a decent correction from any final top or intermediary top that the company or the stock is making, and then it is falling relentlessly, then you get into the stock. If we consider 800, 820 as the top, which is the current level, then probably levels between 550 to 680 is reasonable enough to get into the stock. I would wait for at least below 700 levels to start buying, if I would have to, rather than get jumping in right now. And you can take your own call with your own analysis. It could be a very good stock from a 10-year perspective. This is slightly different. My perspective on this stock is slightly different when you have looked at my perspective with the pharma and IT pack, in which I have said that it would be a 2-year story. I think this company may have a good 8-10-year story with a 7,000 crore market cap at the moment. After correction, it would may come down to below 6,000 crores. I think this could be a big in the next 10 years. I don't know what market cap, but it could be very, very good going forward from a 6 to 10 year time frame. But do not buy in a hurry. Do not look to buy just immediately and think that okay, this will keep going up, and this will go to 4,000, 5,000, 8,000 in the next 4 5 years. Maybe it will, but maybe it would correct 20, 30, 40% from these levels. So sustainable earnings growth in my opinion would be 15 to 20% over this time frame. So I am pretty confident, although anything can happen in the market, that there can be a PE contraction after a year and a half, and the stock may correct even more. So eventually the PE the market might give to something like AARTI drugs would be around 20 to 22, maybe 25 times earnings, and earnings may grow. But when the PE comes down from 40 to 25, that's a 30-40% correction there and then. So you have to understand that there is a possibility of 20 to 25% correction in any way possible, even with the earnings going up over the next year and a half. But it can give handsome returns over 6 8 years. That looks like a possibility with the kind of business that the company does. So what needs to be done? Can buy for long term, but to wait for decent correction. Again, as I said, minimum 20%, 15-20% from the top. Avoid at these levels and show patience. Be a little bit patient. Wait for major fall in the market. Wait for you can say a complete decline in the market altogether, and then you can just have your shopping list ready and buy into the stocks. Uh, the company looks good. It is just that the valuations looks attractive. Pharma being in fashion is a good tailwind for the company, and have less than 10% exposure to such stocks. So this was my video on AARTI Drugs. Please like and subscribe my channel, hit the bell icon, and also just support me on Patreon. It will help me a great deal in continuing with the channel here on YouTube. Thanks a lot for watching.